Hello, welcome to the Wealth Starting Line. Don't forget to like, comment, share, and subscribe.
Welcome to The Explainer. You know, if you've been keeping an eye on the markets, you've seen some pretty wild moves lately. We are seeing a truly historic moment for precious metals. So today, we're going to break down this explosive rally in gold and silver and what our sources think it's all pointing to for 2026.
Okay, let's just dive right in with this really powerful idea from the analysis. This isn't just about the numbers you see on a screen. If you're only watching the day-to-day price, you are missing the real story here. What we're seeing isn't just hype, it's a symptom of a much deeper reset that's happening across the entire global financial system.
And this is the number that basically shocked the world. On December 22nd, 2025, the price of gold didn't just break records, it completely shattered them. It briefly shot past this incredible $4,460 per ounce mark. Honestly, it felt less like an investment and more like a money printing machine just went into overdrive.
And look, if gold's move was a shockwave, then what silver did was a full-blown earthquake. At the very same time, silver just charged ahead like a runaway train, pushing right up towards that $70 mark. When you put them together, this became the most volatile, the most powerful, and just the most dramatic year for precious metals since way back in 1979.
So you have to ask, what is behind this absolutely explosive move? Well, it's not just one thing. The analysis makes it really clear this isn't some random bit of speculation. No, it's a perfect storm, and it's being created by three massive global forces all colliding and amplifying each other at the same time.
So here they are. You've got these three distinct drivers, but what's really fascinating is how interconnected they are. It all starts with uncertainty over at the U.S. Federal Reserve, but it quickly spirals out to involve global conflicts and these huge, often very quiet purchases by central banks.
You know, this metaphor from the source just perfectly captures the mood right now. The Federal Reserve, the institution that's supposed to project stability, is completely divided. I mean, during recent interest rate meetings, governors were openly disagreeing with each other. Some wanted aggressive cuts, others wanted to hold the line. That sends a really dangerous signal that the people in charge don't really know which way to go. And that kind of uncertainty, it's the perfect environment for gold to just take off.
And this right here, this illustrates the new world we're living in. For decades, the rule was simple. When the US dollar got stronger, gold got weaker. It was like a seesaw. But that rule book has been torn up. Now, it doesn't matter if the dollar is rising or falling. Gold just keeps climbing. And that tells us something really profound. Global faith in the dollar itself is shaking, and all that capital is desperately looking for a safe place to hide.
On top of all that, you have this secret story playing out in the vaults of central banks. So while the official data from a country like China shows they have around 2,300 tons of gold, major Wall Street firms estimate the real numbers more than double that. So why the secrecy? Well, because these nations aren't just treating gold as an asset anymore. They see it as a financial nuclear weapon, a strategic tool that gives them a final defense against sanctions and the power to back their own currencies if a crisis hits.
Okay, let's shift gears to silver, because this is where the story gets even more dramatic. If gold's rise is all about fear and uncertainty with money, silver's story is about all that same fear, but with an explosive industrial demand kicker. There's a reason people call it gold on steroids.
So this is the crucial point. Silver basically has two engines pushing its price up, while gold really only has one. Yeah, silver shares gold's role as a safe place to store your money, but it has this powerful trump card. It is an absolutely essential, you can't replace it component in all the technologies of the future, from solar panels to AI data centers. It's literally the lifeblood of the new energy and tech revolution.
And this dual demand creates the absolute perfect setup for what's called a short squeeze. For 5 years straight, the world has used more silver than it has mined. That's created a huge supply deficit. You can actually see inventories in London and New York draining. So you've got this exploding industrial demand chasing a shrinking supply. And that forces anyone who is betting against the price to rush in and buy, which of course just pushes the price even higher.
Okay, so let's recap the foundation here. A chaotic world, a confused Fed, and a supply crisis brewing in silver. With all of that as the backdrop, where do the major players on Wall Street see prices going? Well, the consensus forecast for 2026 is, to put it bluntly, staggering.
Now, the source is clear that in the short term, gold is technically a bit overbought, which just means a pullback is possible. But here's the thing. This is being framed not as a risk, but as a great opportunity to buy on dips.
Looking past any of that short-term noise, major firms like JP Morgan have set a stunning 2026 price target. They believe gold could cross that $5,000 mark.
And what about silver? Well, because of its dual drivers, that monetary demand and that industrial demand, the analyst team from our source thinks its potential is even greater. They argue that silver could not only smash through the $100 barrier, but could potentially even reach as high as $120 an ounce. We're talking about returns that could seriously dwarf what gold does.
So, the billion-dollar question, right? How does a regular investor even begin to approach a market this wild? Well, the source material is very clear on this. You got to forget the gambler's mentality of going all in. The key is to approach it with a disciplined, structured plan. The specific framework they recommend is a 60-20-20 allocation model. So that's 60% of your portfolio in stocks, 20% in bonds, and then a pretty significant 20% chunk dedicated to gold and silver. In this environment of a global debt crisis, that 20% isn't just for growth, it's designed to be the safety airbag for your entire portfolio.
Now, inside that 20%, you can think about it in 3 tiers. First, you have physical bullion, actual bars and coins. That's your anchor, your foundation for a worst-case scenario. Second, you have ETFs, which are great for easy liquidity and trading. And third, for anyone with a higher risk tolerance, you've got mining stocks, which offer leverage exposure to the metal's price.
And this is a really, really crucial piece of strategic advice. The source strongly warns against trying to time the market perfectly or buying everything you want all at once. A much safer and frankly more effective strategy is to divide your capital into a few parts and build your position in batches, especially by taking advantage of any price dips along the way.
Of course, no investment thesis is ever bulletproof, and it's always responsible to look at the counterarguments. The analysis points to a few black swan risks. These are low probability but high impact events. Things like a sudden tech leap from AI that just kills inflation, or an unexpected peace deal in a major war, or a surprise U-turn from the Fed. Any of those could trigger a pretty significant and sharp correction in metal prices. So, let's pull all this together. What you should really take away from this explainer is that this isn't just another bull market. The fundamental role that gold and silver play in the global financial system is changing right before our eyes. They're evolving from being simple hedges against inflation into something much, much bigger.
Now, the path to $5,000 gold and $100 silver is almost certainly not going to be a straight line. There will be bumps, there will be volatility, and there will probably be some sharp drops. But the core message from the source is to kind of reframe how you think about that. View those pullbacks not as a reason to panic, but as a necessary squat that's just building up the energy for the next explosive jump high.
And we'll leave you with this final thought to chew on. In an era where paper currencies can be printed without any limit and geopolitical stability feels like a distant memory, holding physical gold or silver is becoming more than just an investment choice. You have to ask, is it now a vote of no confidence? A statement on the stability of the entire system we all rely on?
Thanks for watching. Don't forget to like, comment, share, and subscribe. See you next time.